Good morning, Twin Cities, and welcome to your Sunday. Welcome to Reckoning with Real Estate, a show about the American dream and building a better real estate company. I'm Paige Kale. I'm here with Ben Feldman with Active Insurance Solutions. And our last episode, if you tuned in, we talked about the importance of if you need to file a homeowner's insurance claim, to contact your agent and talk about if that would be wise to do so, depending on the value of the claim. It could impact future premiums. So this episode, we're going to talk a little bit about minimum deductibles. We'll talk about insurance add-ons that people might want to consider when buying a home, or even if you're an existing homeowner, you might want to talk to your agent about adding on some of these coverages. And Ben, why don't we start with minimum deductibles and roofs?
Yeah. So one thing that's one of the changes happening in Minnesota with all the frequency of roof claims and hail damage is that carriers are starting to add mandatory minimum deductibles, either for any type of loss or specifically for wind and hail. So if you look at your policy, sometimes the all perils deductible, which is going to be water, fire, theft, any other loss other than wind and hail, will sometimes have a requirement of $5,000 based on the home size, but then there could be a separate requirement for wind and hail deductible, which might be $10,000, or it'll say 1% of the dwelling coverage. And so it's important you recognize that, because not only if you're shopping around, it'll be on the quotes you're getting, but also on your renewals. If you're with the same carrier, like Nationwide is one carrier who just changed from having no minimum deductibles, that every renewal that came through, starting on all renewals, everything changed to a 1% wind and hail, which, 1% on a $500,000 home is $5,000.
And how do they get the value? Is it just the assessed value, or what?
Yeah, the dwelling coverage number we're talking about, where it's a percentage of, is the reconstruction value of the home. And so
gotcha.
If the reconstruction $750,000 on your policy for your house, and you're with Nationwide, and they changed mandatory, you need 1% for wind and hail deductible, you'd have $7,500 wind and hail deductible for any hail damage loss.
So just so our listeners know, and correct me if I'm wrong, generally speaking, the replacement cost, like how much it's going to cost if your house burns to the ground and you have to rebuild it, is generally going to be higher than what your assessed value is or what the market value is. Is that a correct statement?
That is correct. Land value is the one thing. If you're in Edina, or heart of Edina, and you have a small parcel or property on a really valuable piece of land, that's one thing where the assessed or purchase value is going to be the other way around. But if you look at the market value of your home on the county website without land value included, that's where, yes, that number is typically going to be less than replacement cost new, which is how you insure your home, and that's how your lender wants you to insure your property. So
I have a follow-up question, and this kind of relates to, it's just I get curious. How many total losses have you covered during your time as an insurance agent?
Yeah, I've had 3 fires in the last decade, like notable fires. One was a total loss of a detached structure, a detached garage, but I've had one home total loss, and I had another fire loss that wasn't total, but it was $1 million claim. So thankfully only been through one with that, but yeah, it's not super common. But when it happens, it's very expensive.
Right. And can be devastating unless you have the right coverage.
No one thinks it can happen to them until, it happens, or that someone in their family is impacted by it, et cetera. So, deductible election, or we don't need that coverage in this. It's always tough until you go through a claim or two with home insurance and you kind of understand how insurance works.
Right. And we talked about in the previous episode about if you have a mortgage on your property, you have to have homeowners insurance. If you own your property outright, you don't have to have it. Is that correct?
Yep.
And that's a little bit of a dangerous game to play, but
similar to when you have a vehicle, right? And you pay off the loan, you can do liability only on the car if you want to, but typically you only do that if the value is very low. And then you're willing to self-insure on, if it's $2,000, $3,000, $4,000 of value for your car. lot of people when the loan's paid off. On a home though, if you're rolling the dice on, on that, it's a little bit different. Most homes
Right.
cost more than a couple $1,000s. So it's still very uncommon for people to, unless you're talking about a pretty small cash purchase, typically out, very tiny building. Maybe it's run down or
Right.
super old or has condition issues. Most people are going to retain a policy on
Yeah.
those properties.
Yeah. Yeah. Which is wise.
Yes.
Okay. So that's roof, minimum deductibles. I know, did you have something else to add
Yeah,
about
I
the
would just
minimum?
say make sure to review, even if you haven't changed policies, review your renewals, because sometimes the
Yeah.
carriers make changes to the deductibles that are required on your policy. And if you don't read the cover pages on the renewal docs you're getting, or your agent doesn't talk to you about it, changes can happen. And so you don't want to be surprised. It's important to review your renewal documents and look for those notices, because carriers are making changes. It's very,
Mm-hmm.
last year or two especially, there's been a lot of changes with deductibles and also how your roof is covered, which I'll get into next.
Okay. Okay. And it's probably not a bad idea for folks to just set up an annual review on an ongoing basis with their insurance agent.
Right.
To kind of talk through these things.
Yeah. And I would say for the most part, agencies do their best to have like a built out process in place for that. The best thing you can do though is when you get your renewal documents, if you want to review it or have a conversation, your agent should be available for you. So like you should have a relationship where you can reach out and have a 15-minute call even to have that conversation. And so I always say that when our clients show that they're interested and want to have a dialogue, those are the dialogues we want to have happen. It's tough for us, when we offer annual reviews or send out emails to set up review calls, very few people respond. And so just in general, they usually don't have a conversation. So if you're, it's important for you as a homeowner to also review your documents and then set up conversations with your agent to have that discussion to make sure the dialogue happens.
Because I imagine you would much rather have these proactive conversations than have the conversations on the back end when there's some sort of loss and they're like, what do you mean I didn't have this, this coverage? And
so once a year, it's good to review those, set up a call, have a conversation with your agent. It takes 10, 15 minutes to do that. And just make sure you have a good understanding of any relevant changes that you need to be aware of.
Yeah, because like any other big industry, because I could say this with the real estate industry too, it's constantly changing and evolving. What was true last year or 5 years ago may not be true today or next year.
Yeah.
So I think that's a really good bit of advice to reach out to your insurance agent and review your coverage once a year and look at how it's changing. And so you wanted to add something about the roof coverage?
Yeah. So kind of with the profitability challenges of hail claims and replacement of roofs since over the last several years in Minnesota, carriers changed their deductible requirements to make people self-insure a little bit more on a potential wind and hail loss or hail
when
damage.
You say self-insure, that translates to people carrying more of the cost.
Yes, higher deductible. So when I say self-insure, it means you're having to carry a higher deductible. So you're putting some money into not just the carrier in the event you make a claim. So that's becoming more common just as home insurance premiums have gone up. People are choosing higher deductibles anyways because their premiums are so high and expensive that it's one way to cope with paying those premiums is be willing to pay out of pocket more if you do have a loss. And so that's a trend that we've seen. The one thing I was going to add about, so with the roof is that reviewing your documents or having a conversation with your agent about your roof coverage is important because over the last couple of years, in addition to the deductible changes, carriers are also changing how they cover your roof in the event of a loss. So in the past, it's been replacement cost. You have damage on your roof, it's 15 years old, they're going to pay the labor and materials to replace it, less your deductible, full replacement cost at any age. And then in the last, or a few years ago, it went to if it's under 50 or if it's under 15 years old, they'll do that. Or if it's under 10, and then they sometimes start changing it or backing it down. The new common trend that you're seeing with a lot of companies is that they call it, you have replacement cost, which you can still get typically under 10 years old on a roof. You should be able to get replacement cost coverage, 100% payout in the event of a loss with most providers.
Under 10 years or younger?
Or newer.
Newer. Yeah, I guess
once you go to year 11 with most providers, you're going to get something where they call it a roof payment schedule. And if you look in your policy documents, it's a grid. It says type of roof shingle. So if it's wood shake or rubber or asphalt shingle, whatever it might be, and it has age on the left down to like 30 years, and then it has a percentage payout that you're going to get in the event of a claim for your roof for the roof if you have a loss. So if you have a 15-year-old roof, it's asphalt shingle, it'll probably say like 60, 62 or 60% or something like that. And so
And is that after your deductible?
So it's before deductible. So they're going to give you 62% of replacement cost less your wind and hail deductible. So if your roof is going to cost $20,000 to replace, and your wind and hail deductible is say $5,000, and you have a payment schedule on your policy for 60. Let's do easy math here. So
I know I was.
Let's say 75%. It's at 75% payout, right? So
7,500. Is that right?
So you would have 20,000.
15.
75% of that is 15,000 you're eligible for, but then you have to take off your deductible. So you take the eligible 15,000 less your 5K deductible, you're getting 10 grand to replace that $20,000 roof.
And then out of pocket for you is
10,000. Yep. And so if you had full replacement cost, you'd be getting 15,000 because you're still taking off your 5K deductible.
Sure.
But if the roof's 25 years old, that percentage payout might be like 25%, 30%. It really starts to drop down at the end of the life.
Yeah.
Where just like an old depreciated car, if you have an accident, it's like market value of the car, right? It's typically is how you're paid out on your vehicle is comps in the market for a similar condition. Now with roof coverage, most carriers go into this payment schedule where it's going to be payout based on the age of the roof, which is how it should be, because hopefully the goal is that these insurance premiums are going to start to come back down, because right now everyone.
Do you think that will happen, that insurance premiums will come down?
Carriers start to get competitive and try to earn more market share. So when there's good profitability for carriers, like in 2025, it was a profitable year in Minnesota for most insurance providers. Not a lot of hail. A lot of carriers took a lot of rate and they were pretty profitable this year, which next year I expect some carriers will be like, okay, let's get aggressive. Let's start owning more market share. And that's where you start to see, carriers start to get more competitive on their rate to get the market back down. But it takes time and it's not going to be immediate.
Sure. Which is another reason why people should maybe shop insurance every few years rather than just staying with the same insurance company, which is so easy to do because you just don't have to think about it.
Yeah. So especially in this type of market, it's good to be doing check-ins, whether, if you're working with an independent, they can check options. But I do expect in 2026, there are going to be carriers out there getting really competitive to bring on new clients, because profitability was solid in 2025 and they want to grow their book. So we should start to see some options to move to new carriers with kind of that in mind.
Okay, well, that's a positive note to end this segment on. We're going to go to break for a few minutes, but stick with us and we will continue our conversation with Ben Feldman. You are listening to Reckoning with Real Estate. We'll be back in a few minutes. Welcome back to Reckoning with Real Estate, a show about the American dream and building a better real estate company. I'm Paige Kale, and I am still here with Ben Feldman with Active Insurance Solutions. We've been talking about roof coverage for homeowners insurance, minimum deductibles. We're going to continue on a little bit talking about roofs, because that is the primary claim in Minnesota because of hail damage. So it's kind of a hot topic. Ben, you wanted to talk about roof exclusions. And then I had a question before we go into that. The difference between class 3 shingles and class 4 shingles, my understanding is the class 4 shingles, you can get a better rate on your homeowner's insurance if you have. I don't even really know the difference. Let's just start there. What's the difference?
I wouldn't say I'm a roofing expert. We have good partners who who obviously interact with our clients and doing inspections and things prior to making a claim. We typically always have our, roofing partners go out to say, hey, before we open a claim, for the reasons we talked about, can you go inspect and see if there's damage and all that? One of the things, if you get an approved claim, you're replacing your roof, is the class of hail resistant class of shingle that you're going to use to replace it. Typically, the carrier nowadays, any new roof you're putting on is going to be class 3 by default, almost all the time, from what I understand and talking with our partners. Roofs 10, 15 years ago, that wasn't always the case, though. Some carriers, not all of them, provide a discount if you have class 3 or class 4 shingles. Some, it doesn't make a difference between the two classes. Like Auto Owners is one carrier where it's 3 or 4. They consider that hail resistant and they give you a discount for it. Whereas other carriers like Pure Insurance, they do high value homes. They have a notable difference in credit between class 3 and class 4.
Okay. And
So
class 4
discount
just means it's more
higher,
resistant
correct.
to
Yeah.
hail.
So
or
sometimes you
damage.
can talk with your roofing contact, and they should be able to tell you the price difference. If it's a claim, the carrier will probably cover 3, but you could upgrade to do 4, and they'll tell you the difference in price. But what I would tell you is that for the average homeowner, first-time homeowner, this isn't probably the difference between 3 and 4. They're not going to probably see enough premium savings.
Okay.
3 is default. To go to 4 for the average homeowner probably doesn't make sense. Where it really starts to benefit you is if as the roof ages over time, as it gets to 10, 15, 20 years old, that's where with the carriers who offer discounts, typically the higher class shingle is more valuable because it's more hail resistant, whereas a brand new roof 3 or 4 is pretty resistant. I think it's longevity of kind of like the biggest discounts we've seen are 10 to 20-year-old roofs with class 4 versus class 3. Some carriers will offer really nice discounts for that. So in general, I would say with how much hail we get in the States, like my recommendation, I wouldn't probably spend a ton of money to go to class 4. Again, you can talk with your agent about it if it's going to have savings on your policy, but from what we've seen, it's probably a unique scenario where we would really push someone to do it unless they're really motivated. Obviously, higher deductibles on wind and hail, the more resistant your roof is, the less likely you have to file a claim. So if you don't want to shell out deductible money,
Right.
in 5 or 10 years and have a higher quality roof, that's also an option. Or you can consider metal, which is another option to replace your roof with a metal roof. Some people will spend the money to do that because it's more resistant than asphalt shingle to damage. And so metal roof is one that we're seeing used as well in Minnesota now, instead of just replacing it with shingles.
Well, and we've talked about this before too, that this is why when you're looking for a home, you really want to know about these things. I mean, most people, when they're looking for a home, they're like, oh, is the kitchen, functional? Does it work for what I need? Or, how big are the bedrooms and things like that are kind of fun, which they are fun because you want to be able to live in a house the way you and or your family need to live in the house. But really, it's so important to think about the mechanicals and the structure and the roof and how old is it and what is the material and what is its life expectancy.
Right.
Same with furnace and hot water heater and the sewer line. Get the sewer line inspected if you're buying a home.
Right.
Just have that sewer inspection. So let's talk about then roof exclusions, which is a new term for me. So what are roof exclusions?
So in the event that you're purchasing a home or your existing home, you're trying to insure a property that has a really old roof, or it has, moss growing on it, or existing damage,
I've
or
seen
curling
those.
shingles.
Mhm.
And you write an insurance policy with X provider, they come do an inspection and they're like, we're not insuring this. The condition is poor. There's a hole in the roof. Let's say there's a hole in the roof, or
Do all insurance companies do inspections, even like drive-by inspections, say?
most of them are still doing exterior inspections on
They
almost every
are.
property in
Okay.
Minnesota. There are
Okay.
there is some now aerial imaging that's being used, maybe for rural or things like that, but almost all the time, and when you issue a policy, you should expect it. It's going to be a third-party company who comes out and says, hey, we're with Millennium and we're here to do a walk around. People are like, who's Millennium? Like,
We never get notified
Yeah.
of these.
and the agent doesn't know the timing of it either, but it is disclosed like in the application that you sign and things.
Okay.
That they're going to conduct an inspection. It might be a third party. So most people, if the agents aren't mentioning it, obviously they get surprised and they're like, I'm not letting you do my, property. And so, but it is a normal process every time you change insurance to go through that. But the roof exclusion thing that I mentioned, there are some carriers, not many, but some carriers who will offer to put an exclusion on the roof if the condition's really poor, it's super old, and you can't get a carrier to stay on it. You can write it with an exclusion, which is going to exclude any damage to the roof as well as any damage resulting from the condition. So if water came through the roof, that damage would be excluded, but it is a way to insure for all of their losses and get coverage in the property.
And how do mortgage companies feel about that?
They typically aren't going to know if the roof is excluded or not. It's in what's provided to them. It's probably not something that flags. Although another topic is this whole actual cash value roof coverage thing is becoming an issue with underwriting with loan officers. So maybe Matt, who I know has been on the show, could probably talk with you about that. But in general, if you have an exclusion on your policy, it's probably not going to come up in discussion from a loan perspective on a new purchase. Just there's there's a lot of different scenarios there, but in this case, if you had an exclusion, the idea would be that you're going to replace the roof soon,
Right.
or you're willing to self-insure on that aspect if you're not going to do it. But there are a couple carriers that will write it that way if you're really struggling to get a home insurance provider to stay on it, because every time they come out to do an inspection, they're like, there's like curling shingles everywhere,
Right.
and we can't stay on this. That's one way that you can go.
And are there other exclusions with homeowners insurance, or is that the main one that you see?
I mean, I guess as far as exclusions of trying to think of other examples, like sometimes you could have a water damage limitation on like how much water damage payout they would give you on a property. That's not very common.
Yeah.
But like depending on like investment properties or rental properties you have, sometimes they limit the amount of payout for certain categories of coverage, water being one that they might.
I guess I'm thinking like more, what if the siding isn't in good condition, or I don't know.
Less of a risk just because like water getting in through the siding is probably, it's the roof is obviously a
gravity and
main
all.
risk
Yeah.
with like water coming in through the roof versus siding or anything else. So we don't see it a ton other places as far as exclusions on the policy goes, but some of the supplemental coverages you can add, technically all those items are excluded unless endorsed on the policy.
Ooh, let's
right?
talk
So maybe
about
that can transition into that.
Let's talk about the add-ons to homeowners insurance.
So endorsements we call them endorsements, are like additional
Okay.
coverage you can endorse or add on to your policy. Your agent would oftentimes be recommending or including these in your proposal, even without you requesting them. If they're doing a good job, they should be hopefully recommending some to you.
Mm-hmm.
Some of the most common ones, which we hit on an earlier episode, was water, sewer, and backup coverage. That's one of the more common that you want to make sure you have to cover a sewage backup or water backup in the basement, and any damage resulting from that. We've talked about service line coverage as well in a prior episode, the sewer line from the street to the house. And if that collapses or needs to be excavated, having coverage on your policy for that as an add-on that's available, or an endorsement. Other common ones are like home system protection or equipment breakdown. If you have a power surge in your furnace, implodes, or there's an explosion that isn't normal wear and tear, you can include that on your policy as well. It's not super common loss, but it is something you can add for that type of like rare occurrence where you have a system in the home malfunction and no longer operate properly. You can also add on like what was some of the home cyber protection is a new one that's being commonly offered now by carriers, where if you have ransom or someone hacks your computer and your bank accounts and they're requiring you to unlock your device, you need to transfer money or something like that, you're seeing cyber become an included offering for home insurance policies now. So something to discuss with your agent to see if your carrier offers coverage, but it is something that we're seeing more and more in the digital age is cyber risk and exposure for even for the average person.
Yeah.
And then like identity fraud protection is available. There's a whole list of other increased limits and things you can add. And that's really working with your agent of, scheduling jewelry or firearms or special property you want at an agreed value, all sorts of other elective options. And that's really just your agent kind of talking with you about your situation and the property you have in the home and what might be relevant for you.
So the bottom line is talk to your agent, ask the questions. Hopefully your agent is giving you the information you need to make an informed decision. When you're buying a house, know kind of the age of these things and know that, you might have some insurance risk if the roof is super old or if the sewer line hasn't been inspected or things like that. To wrap up the show, and I was also going to say, just kind of reiterate, we've talked about this before on previous episodes, but just the importance of when you're looking to buy a home or sell a home or get homeowners insurance or get a mortgage, just talk to somebody local. I think that's the best bit of advice. Somebody where where they where they live. No, you can eyeball to eyeball. They're going to pick up the phone. You're going to talk to the same person, or at least maybe a couple different people, so you're not having to kind of re-explain things to the 1-800 person who happens to answer the phone. I think that's so important when you're kind of making one of the biggest financial decisions of your life. And then to end the show, I'm just curious. You had mentioned that you work with, so you're a broker, an insurance broker, so you work with a lot of different companies. And you said you work with about 20 companies. Are they the big ones sometimes, or are they smaller ones? A mix?
Yeah. So a lot of it's a mix. I mean, a lot of the carriers we write with, you probably have heard of, but there's independent agents work with like, AAA, auto owners, Safeco, Travelers, Nationwide. They sell
Okay.
through independents.
Yeah.
And then there's captive agencies like State Farm and Farmers, where they just have their dedicated agents and they only sell their one individual product
Okay.
typically.
Okay.
And so there's captive and independent, and we're an independent agency. So more options.
Yeah, more options
Our
are
slogan is more
always.
options, less hassle.
And remind people where they can find you quick.
www.aisolutions.mn.com. Ben Feldman. You can
Okay.
Google me too.
Okay. Well, Ben, thanks so much for taking the time to be here, and thanks for being a sponsor of Reckoning with Real Estate. I'm Paige Kao with the Real Estate Collaborative, and we hope to see you next Sunday.
Take my breath away, oh, wrecking ball, you steal the show. Every move